Hey guys, it's June Collier, and today is Monday, August 22nd, 2022. I want to do an update on a video that I did earlier this month on the AT&T stock. So we're looking at AT&T today. It is trading at $18.10. Now there's a couple of things that I want you to write down. The first thing that I want you to pay attention to is I want you to pay attention to the dividend yield. So currently AT&T pays 6.02% yearly or annually in dividends. So I want you to take a look at that, okay? I also want to just talk about the dollar amount that you receive on a quarterly basis. So we're going to go over to the AT&T website where AT&T declared their dividends. This was on June 28th of 2022. And so they declared their quarterly dividend of 27 cents per share on common share stock. So every share of stock that you own, when dividends are paid out, you're going to pick up 27 cents for every share of stock that you own. Now, that's going to be that 6.02% when you tally that up for the year. Now, let's go and take a look at what we did in our trading account. So I'm going to click here so you can see what day I bought AT&T. You'll see that I bought AT&T on July 27th, and I paid $18.37 for the stock. So I paid $18.37 for the stock on July 27th. You're also going to notice that I bought 100 shares because in order for me to write or sell a covered call, I have to have 100 shares of this stock. So I bought 100 shares of the stock at $18.37. Right now, the stock is trading at $18.13. So many of you would say you're losing money. In fact, it says that you lost $23 on this deal, okay? And so if all I did was buy the stock, then you would be correct. I would be negative. I would be a negative 1.2% on the stock, but I'm not. So let's see why I'm not a negative 1.2%. So if I come down here, I actually, once I bought the stock, 100 shares of the stock, on that same day of July 27th, I actually wrote a covered call or sold a call on AT&T with the expiration date of August 26, 2022 at the strike price of $18.50. And because I wrote that call, what I received was 41 cents. I received 41 cents. Now, anytime you sell a option, you're going to see there's going to say a negative here for the quantity, okay? And remember, one contract is 100 shares, all right? So I received 41 cents. So for me to figure out what my cost basis was or is, I've got to take the price that I paid plus the premium that I received from the option, and that will tell me the true cost of my stock. So I'm going to pull out my calculator. I'm going to take $18.37, which is what I bought the stock for, and then I sold the $18.50 covered call, and I received 41 cents as the premium. So if I subtract the 41 cents, my true cost is $17.96. So even though the stock is $18.13, my real cost on this stock is $17.96. So I haven't lost anything, okay? All right, $17.96 is my break even. Now, I want you to also take a look at something. As we look at what I received for selling the covered call, you're going to see that the value of the contract on July 27th was 41 cents. Today, that same contract is only worth 5 cents. So technically, I could buy back my contract right now and be out of it. But the contract expires in about 4 days, August 26th. So we're looking at 4 days before the contract expires. I want to hold on to this and just see what happens. I normally might be interested in selling the contract and getting out of it, but let's just hold on to it and see what happens. So let's take a look at what kind of returns am I getting. So if I bought it for $18.37 and I received 41 cents for the covered call premium that I sold, or the covered call. Let's go over here to the percentage calculator. I got 41 cents on a stock that I paid $18.37 for. And then we'll calculate that. That's 2.2%. Now, if I can repeat this each and every month and get 2.2% each and every month, let's take a look at annually what that is. So we'll take out our calculator. We'll take out 2.2, multiply that times 12. That would give me a annual rate of return of 26.4%. But let's not also forget that AT&T also offers us 6% just in dividends. So if I add 6% to that, I'm now looking at a rate of return of about 32.4%, which is phenomenal. In fact, if we think about the rule of 72, the rule of 72 says whatever you divide by 72, let's just say 72 divided by 32, and I can't even remember what it was, 32 point something, but let's just click on that. That tells me that my money is going to double every 2.2 years, right? So every 2 years, my money is doubling using this strategy that I'm using with AT&T. Okay, so don't let the small amount, because I'm getting this on a monthly basis, when you annualize that out, it becomes very, very attractive. Let's go back to my E-Trade account. I want to share something else with you. So this contract is about to expire, and I think it's going to expire worthless. We'll see. You'll also see that I sold a put, an $18 put. So let's open that up and take a look at when that happened. I sold this on August 8th, an $18 put, and I received 36 cents and 40 cents. So you'll see I have two contracts here. One is for 36 cents and another one is for 40 cents. Okay. Let's see what 36 cents is compared to $18, because this was for an $18 put. So we go back to our percentage calculator and we say 36 cents on $18. That is going to give me a 2% return. Okay, again, there's that 2%. 2% annualized is going to give me a 24% return. All right. And then if I look at the other contract, it was actually 40 cents that I received on that. So 40 cents on an $18 put. So if I go back to my percentage calculator and look at 40 cents, that's going to give me 2.2%. So you can see that AT&T is one of those stocks that right now is probably ballpark ranging between $18 and $18.50. And so all I'm doing is I'm playing the range. I'm playing between $18 and $18.50. If the stock drops down close to $18, I sell the put. If the stock is going high and it goes up close to, $18.50, I'm selling the call. And so when this contract for July 27th, which is, August 26th, when this August 26th contract expires on Friday, I will then have the opportunity to write a covered call again on Monday. So this is going to expire on Friday. It's probably going to be maybe 1 cent or something like that. I might even buy the contract back for 1 cent and then free myself up to actually sell another covered call. Who knows? But remember, if the contract expires worthless, I get to keep the stock and I get to keep the premium that they paid, and then I get to write that contract all over again. That's the power of selling a covered call, as well as the power of selling cash secured puts. So on AT&T, I'm kind of doing about 2% a month on this particular stock. Very relatively safe. Obviously, it's not, 20%, 30% that we're making on this. But this is one of those plays that I want to be sort of kind of risk-free and just kind of play this play along the way. Now, I say risk-free. Nothing is risk-free in trading. Let me go back and correct myself. I've minimized a lot of my risk using these strategies with AT&T. All right. I hope that has been helpful for you. I hope you learned a lot in that training. We'll do this again on Friday as we get closer to the expiration of this AT&T contract to see exactly what happens.